Everybody is looking for the best investments during high tariffs because that's what we're talking about today. Tariffs, trade wars, these things can be scary, folks. The market hates uncertainty, but you know what I say? Uncertainty is opportunity. While everyone else is running for the exits, we're going to be greedy when others are fearful. We're going to buy low and we're going to sell high. We're talking about 7 powerful investments that can thrive when tariffs rear their ugly heads. These aren't just any investments, folks. These are battle-tested, tariff-proof titans of industry. So buckle up, get your game face on, and get ready to take notes because we're about to break down how to navigate this market like a pro and come out on top. We're going to talk domestic manufacturing, agriculture, commodities, energy, and more. We're going to dissect each sector, analyze the trends, and identify the key players that are poised to profit. This isn't about gambling, folks. This is about making smart, strategic investments that can weather any storm. So if you're tired of watching from the sidelines while others make a killing in the market, stick with me. We're about to unlock the secrets to investing success in a world of tariffs and trade wars. Let's dive in. Please like, subscribe, hit the notification button, and share the video. Also, check the links in the description. First on our list, domestic manufacturing stocks. Listen up, people, because this is where the real money is made when tariffs hit. See, when those tariffs make imported goods more expensive, guess who benefits? That's right, the companies making those same goods right here at home. We're talking about a surge in demand for American-made products. Companies that were struggling to compete with cheap imports suddenly find themselves with a huge advantage. It's like leveling the playing field, folks, and these domestic manufacturers are ready to come out swinging. Think about it. Steel, machinery, consumer goods, these are the industries that are going to see a resurgence. These businesses can benefit significantly from the shift in production back to local manufacturers. We're talking jobs, folks, we're talking economic growth, and we're talking profits. So how do you play this? You get aggressive. You buy those domestic manufacturing stocks. Look for companies with strong track records, solid financials, and a commitment to American-made products. These are the companies that are going to lead the charge and reward investors who are smart enough to get in early. Next up, we're talking agriculture and farming ETFs. Now, I know what you're thinking. Craig, tariffs are supposed to be bad for exports, right? And you're not wrong, folks. But here's the thing. Tariffs often come with a silver lining for domestic farmers, government subsidies. See, when trade tensions rise, governments often step in to support their agricultural industries. They know that food security is national security, and they're willing to shell out big bucks to keep those farmers happy. And these subsidies can offset the negative impact of tariffs on exports and provide a much-needed boost to the bottom line. But that's not all. Shifting global trade alliances can also create new opportunities for domestic farmers. As countries scramble to find new trading partners, those with a surplus of agricultural products are in a strong position to negotiate favorable deals. And that's where ETFs come in. Investing in agricultural ETFs is a smart way to gain broad exposure to this sector without having to pick individual stocks. You're spreading your risk and tapping into the potential of this often overlooked market. All right, folks, buckle up because we're diving into the world of bulldozers, cranes, and hard hats. That's right. We're talking industrial and infrastructure companies. These are the companies that build the backbone of our nation. And let me tell you, when tariffs hit, they're the ones laying down the bricks for a stronger, more self-reliant economy. Think about it, when trade tensions escalate, governments don't just sit there twiddling their thumbs. They double down on domestic infrastructure projects, roads, bridges, ports, you name it. And who benefits? The construction firms, the equipment manufacturers, the engineering giants, the companies at the forefront of this building boom. We're talking about a surge in contracts, a jump in revenue, and a big, beautiful boost to their bottom line. These companies are like the master builders of the stock market, constructing a portfolio of profits for savvy investors. So keep your eyes peeled for these infrastructure titans, because they're the ones paving the way to big returns in a tariff-heavy world. All right, listen up, because we're about to talk about the granddaddies of safe haven assets, gold and silver. These precious metals have been a beacon of stability for centuries, and when the market gets jittery, investors flock to their shimmering embrace. Now, tariffs can really throw a wrench into the global trade machine, creating uncertainty and volatility. And when the going gets tough, investors get going straight to the safe haven of gold and silver. These tangible assets hold their value even when currencies fluctuate and markets tumble. Gold and silver are like the ultimate insurance policy for your portfolio. They're a hedge against inflation, a shield against economic instability, and a reminder that some things never lose their luster. So when the trade winds start howling and the market gets stormy, remember the age-old wisdom: go for the gold. Hold on to your hats, folks, because we're about to enter the high-flying world of defense and aerospace stocks. These companies are the guardians of the skies, the protectors of freedom, and let me tell you, when geopolitical tensions rise, their stock prices tend to take flight as well. Now, tariffs often go hand in hand with increased global uncertainty and, dare I say it, even a little saber rattling. When trade wars erupt, governments start beefing up their defense budgets, pouring money into military technology, and shoring up their national security. And who benefits? You guessed it. The companies supplying the hardware and expertise for this surge in defense spending. We're talking about companies developing cutting-edge fighter jets, sophisticated surveillance systems, and next-generation cybersecurity solutions. These are the companies on the front lines of defense, and their stocks often experience a surge in demand when the world gets a little more, let's just say, unpredictable. Number 6, and folks, this is a big one, the energy sector. You know, when those tariffs start flying, they don't discriminate. They hit everything, including the gas that powers our cars and the electricity that keeps our lights on. Now that might sound scary, but trust me, it's an opportunity. See, when those imported energy sources become more expensive because of tariffs, governments start scrambling. They know they need to secure their own energy supply, and that's where domestic energy companies come in. We're talking about a potential gold rush for oil, natural gas, and yes, even renewable energy companies. The push for energy independence creates a tailwind for these businesses, driving long-term growth that can really supercharge your portfolio. Remember, folks, uncertainty breeds opportunity. So keep your eyes peeled for companies involved in domestic energy production. These are the businesses that will be riding the wave of government support and increased demand. Don't get left behind in the dust. Last but not least, we're talking about the bedrock of any portfolio: consumer staples and essential goods. Listen, people can live without fancy gadgets and designer clothes, but they can't live without food, water, and basic household necessities. That's why in times of economic uncertainty, these stocks are your best friend. They're the ultimate defensive play. No matter what's happening in the world, people still need to eat, drink, and take care of their families. This constant demand makes consumer staples a safe haven during market volatility. These companies provide the essentials that people rely on day in and day out, ensuring a steady stream of revenue even when other sectors are struggling. Think about it, when tariffs hit, prices go up on everything, but people still need their morning coffee, their toothpaste, and their laundry detergent. And that, my friends, is where the opportunity lies. Now, I know what you're thinking, Craig, consumer staples aren't exactly the sexiest stocks out there. And you're right, they're not flashy. They're not going to make you rich overnight. But you know what they are? Reliable. These stocks are the tortoises of the market, slow and steady, winning the race in the long run. They offer stability and consistent dividends, which can be a lifesaver when the market is going haywire. And here's the kicker. During times of high tariffs, consumer staples can actually see an increase in value. Why? Because as prices rise on other goods, people become more price sensitive and may cut back on discretionary spending. But they're not going to stop buying toilet paper. They're still going to need shampoo and soap and all those everyday essentials. So while other sectors might be hurting, consumer staples can thrive, providing a much needed cushion for your portfolio. So there you have it, the 7 best investments during high tariffs, plus a bonus strategy. Trade wars can create challenges, but they also open doors for strategic investing. Remember, folks, bear markets can be brutal, but bull markets are born in bear markets. Which of these sectors are you watching? Are you bullish on domestic manufacturing, or do you see more potential in the energy sector? Let us know in the comments below. And if you found this video helpful, don't forget to like, subscribe, hit the notification bell, and share the video for more investing insights. Also, check the links in the description. Thanks for watching, and see you next time. And before you go, grab a copy of the Kindle book, Get Rich by Investing, by Craig Smith. He's the CEO of the CRAIGTRADER companies and a longtime experienced investor with a finance degree. This book can help any level of investor become better and more professional. The link to get it is the first link in the description. Thanks for your support.